Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has been fluctuating in losses and gains over the last few days. It still remains above the key support level seen at 65.90 after two challenges failed to break. At present, the market is holding to a slightly bearish tone and therefore could see a rise towards the 66.60 area, but may be limited beyond there due to the technicals remaining somewhat heavy. Looking ahead, the market is now waiting for the US Federal Reserve's favourite inflation gauge, being the core personal consumption expenditure or PCE price index for April. This may give us a little bit more of an insight on what the Fed may be looking on terms of a rate hike path when they meet next week on the 2nd and 3rd. With a 25 basis point rate hike expected, the market no doubt will see a slightly firmer dollar. This will put a little bit more pressure back on the support for the Australian dollar, but we do need to see a break of that key level at 65.90 to expose the region beneath around 65 cents. Looking at the euro, the market was still a little bit whipsawed after the dollar index, which measures the greenback strength against a basket of six major currencies, tumbled to 100.97 before rebounding to 101.54. In overnight data, the US economy's gross domestic product grew by 1.1% versus a forecast of 2%. That is slower than the previous quarter of 2.6, which was slower than the previous quarter to that. However, the accompanying data within the GDP report indicated an increase in inflationary pressures as the consumption expenditure price rose to 4.9% from 4.4%, suggesting that March inflation still remains somewhat high. If we see a further rejection to that topside level, seen around 110.60.75, I feel the market would eventually take a downturn and look towards this level around 109 and reassess from there, because beneath exposes a region of 107. The dollar yen picking up a slight bid tone is now looking closer towards that 134 handle and maybe even on to challenge that key level of 134.80.90. It is assessed from a broader picture that the technicals do support a further gain, maybe back towards 136 to 138 as initial target, with any pullback expected to be limited, with the support seen somewhere around 133.5 to about 132.60. No pullback in sterling, but nevertheless the technicals are somewhat a bit of a lackluster price action in terms of the MACD and the RSI, and therefore could see or limit beyond 125, and that would put the market back on focus to 124.40 or maybe where this base holds around 123.10.15. Finishing up with gold and oil, the market was weaker overnight and still looking very much on the challenge of 1,958 to 64 where I've outlined here. Reassess as the market may stage a bounce like previously seen. Putting aside the head and shoulders pattern due to the shoulder with the head and the right shoulder not quite formed yet, so I'm keeping a close watch on how that unfolds. But for the time being, I feel the bears are still weighing on the support level, with the top side limited around 1,992 to 2,000. Oil seems to have tapped on the brakes, but keeping an eye on this pattern in case it turns into a flag. But that being said, if we see a break to the upside, anywhere from 75, 60, 70, then that would put the market back on the pathway to $80 a barrel, with the base still holding and may, in the short term, around 72.50, 70. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new weekend.